A health savings account is a special personal bank account for adult individuals covered by a high deductible health plan, allowing them to save money tax-free for out-of-pocket medical, dental, and vision expenses. Health savings accounts are triple tax protected because funds are deposited pre-tax, they earn interest tax-free, and you are not taxed when you withdraw the funds to pay for qualified medical expenses. If you do not spend all the money in your HSA this year, you do not lose them. They roll forward to future years. You keep the HSA funds even if you leave employment with 27J schools. Per IRS rules, only employees enrolled in a qualified high deductible health plan are eligible for a health savings account. Employees are not eligible to have money deposited into a health savings account if they are enrolled in the Kaiser DHMO plan, if they are enrolled in a second health plan such as spouse's plan, if that plan is not also a qualified high deductible plan, if they are enrolled in Medicaid, Medicare, TRICARE, or have received veterans benefits 3 months prior to enrollment in a high deductible health plan, or if they have a healthcare reimbursement flexible spending account. Per IRS rules, you may not contribute to both a healthcare reimbursement flexible spending account and a health savings account. You may, however, contribute to a dependent care flexible spending account if you have a health savings account. For tax year 2019, the annual maximum contribution into a health savings account are $3,500 for an individual and $7,000 for a family. These IRS limits include both the employer and employee contributions. However, the balance in a HSA can grow to an unlimited amount. Employees age 55 or older can contribute an additional $1,000 annually into a health savings account for both individual or family coverage. This contribution may be made any time during the year in which the employee turns age 55. It is a good idea to try to maximize your health savings account funding each year. Your personal contributions to your health savings account are tax deductible and they do not reduce your para highest average salary. Your health savings account funds earn interest tax-free, and when you use your health savings account to pay for qualified medical expenses such as doctor's office visits, medications, hospitalizations, emergency room or urgent care clinic visits, you do not pay tax either. And if you leave 27J schools or change to a different health plan in the future, you may use the remaining funds in your HSA to pay for qualified medical expenses. An HSA is a use it or keep it fund. Another benefit of a health savings account is that you may use your HSA to pay for qualified medical expenses of your child or spouse, even if they are not enrolled on your 27J school's high deductible health plan. Please note that if you use your HSA funds for your child or spouse and they are not enrolled on your 27J school's Kaiser high deductible health plan, or if you use it for any medical item or service not covered under the Kaiser plan, that amount will not accumulate to the plan's annual deductible. For example, you may use your health savings account to pay for braces, but you will not receive deductible credit on your Kaiser high deductible health plan since orthodontia is not a Kaiser covered service. Personal voluntary contributions to your health savings account can be done through payroll deduction or by transferring funds from your personal bank account to your health savings account at HSA Bank. Unlike flexible spending accounts, you do not need to submit receipts to get reimbursed for your out-of-pocket expenses. Once you open your health savings account at HSA Bank, you will receive a HSA Bank debit credit card that you can use to pay for your medical expenses at the time of service or when you are billed. We recommend that you keep all your receipts each year in case you are ever audited by the IRS. If you were audited, you would need to prove that you used your health savings funds only for qualified medical expenses. If you use your health savings account for any expense that is not considered an IRS qualified medical expense, you would be subject to paying tax and a 20% penalty. Please see IRS Publication 502, located on the 27J Schools Benefits webpage for a list of eligible medical and dental expenses and for more information on qualified medical expenses. After enrolling, you will be sent an email from the 27J Schools Benefits Specialist with instructions and the online enrollment link for opening your health savings account at HSA Bank. You must open your HSA Bank account within 90 days of the date the first contribution is sent to HSA Bank by 27J Schools. Otherwise, the money will be returned to 27J Schools and you will forfeit the money.